Happy Monday, everyone. This is your favorite crypto trading show, Crypto and Coffee with your trading bros. I'm your host, Clutch Crypto. I'm sorry we were gone last week. We had some things that came up that didn't allow us to be on the show. However, Friday, man, did the Hawkish Fed show up, and B. Wellington's got a little bit more insight on if we think the Hawkish Fed's actually killing crypto, or I'm just going to let him dive into it because he's the expert here. B. Wellington, what do you got?
No, so part of the conversation was about what was the Fed sentiment, that's out there. So just in case people aren't aware, similar to how you have bulls and bears, of course, bulls that are very aggressive in the market, price going up. Bears, aggressively look at the price, moving down. And so, with that, you get sentiment of the Fed. So if a Fed is considered to be hawkish, so if you come out and everybody say, oh, well, the Fed is hawkish, that means hawkish as in like the bird. That is significant of the fact that the Fed's going to be more aggressive or keep being aggressive. So when the Jackson Hole meeting came out, last week, the Fed was very hawkish, um, almost to a point where that they're looking for the markets really to slow down, and the market is defying right what the Fed wants them to do by continuing to move up in this manner. So the Fed really doesn't want this. And why doesn't the Fed, want the market to move up? Because of inflation. Like it'll keep inflation going, even though I think the CPI numbers that we get in the next couple months are actually going to be decent because energy prices, food prices are starting to come down a little bit. Like the demand is starting to correct, but labor, as far as the labor force and inflation there, people are still going to have money, right? Because the labor market is so good. They're still going to demand businesses a higher wage, right? And that is going to continue on with the inflation overall. So I think the Fed will be very aggressive until unemployment gets to a point where it's reasonable employment. I think we're what we would consider to be overemployed, if you want to call it that, at this point in time. So dovish, as in the bird, would be the exact opposite, where they would start backing off of the statements relative to raising, staying neutral, to a certain point, cutting it. And so the sentiment from this last meeting was very hawkish, meaning they were going to continue to be aggressive in the market, quote unquote, reacted to that. Now, you and I both know that, well, one, I never expected the Fed to pivot. That's one thing because of unemployment, where it's at. Two, this is all the narrative that's put out there because we know why the market's pumping right now, why the market has pumped. That's because there's so much liquidity from all the sentiment of people getting, all the bears getting a little overly excited, and therefore they have, a lot of liquidity that bulls can come up and run up, right? And then when that liquidity kind of ended around 2000 last week, it came right back down, right? And so we're having a little bit of a pump again, and that pump is, and I think as we'll see on the charts, is going to be related to the liquidity that's above us, and not because of people thinking that, the Fed is going to do anything. ETH also has the merge, right, which is considered to be the halving. It's considered to be like the halving
Halving.
for for
Halving.
Bitcoin. So so I think most people are looking for that to be very positive before the merge, have a sell off after the merge, right? I think that's the play there. And then you got, I don't know if you've heard of the Mount Gox, right? Have you heard about this? This is the lawsuit where, all these Bitcoins were basically stolen. Then they were recovered by the government. And now the government is starting to release those back to the owners of that Bitcoin. I think there's like $3 billion worth of Bitcoin that's about to be dropped into the market. Not saying that all those people are going to sell, but it's a possibility. And I think people are, aware of that. Anytime you have Bitcoin that's been locked up, and this has essentially been kind of locked up, now it's being unlocked, and so we don't know if those people are going to take some chips off of the table. If I was in that position, I probably would, right? Seeing as
Hell
where it's
yeah.
at. Yeah, I mean, if you're talking about $3 billion worth of crypto, but
Give me one of them
so that
Lamborghini yachts.
yeah, so that's kind of where we're that's kind of where we're at. I don't. I've never seen a Lamborghini yacht, but if you say it's out there, I'm sure it is.
Hey, what's that? That famous fighter's got one. The little arrogant white guy with the red hair.
Oh, he's Irish, isn't
McGregor.
he?
Yeah,
Connor McGregor.
yeah, that dude.
Oh
Yeah,
yeah.
he's got one.
Well,
Yeah,
look.
I
So
didn't know that either, but till the other day.
yeah. So that is hawkish, and I think with the tone that the Fed came out with, obviously they're going to stick to their guns to kill inflation, and I think they still got a little ways to go with that. And I know what they call quantitative tightening is starting to come about as well, where they're starting to take liquidity out of the market. That'll be interesting. But let's get back on the chart. We're talking about ETH. And this ETH is doing it, it's following a pattern. So we knew that the last pump that took us all the way up to this 2000 mark was a little bit of it was a fake pump. It was about taking liquidity out from the shorts. I think we're in how much of that is out there. I think we're getting back to that point where, we're kind of in a range. And, we got up to this 2000. We had that first drop. I think a lot of people we're expecting it to come back up because we kind of got into this, what I would call a support area. And it's a very limited support because, really the support I would say would be kind of down in this area that we got to and crashed right through it, came back and touched it, moved right back down. And so now we've broken through that, call it intra support. And this yellow line here is really the support that, we're kind of looking at. These are the two tops before it broke out on this end. We got up to it. We kind of came back. We busted through it, came back here. But this area here, we never really came back to. I would suspect that we get back into this area. But we may have a run up to take out some liquidity before we got to this area. This would be a very important area. If we do break below that area, just kind of on a longer time frame, I mean, we're looking to come back into this 894, maybe test some of these lows. We may do that, but we'll just have to see how it acts when it gets into that 1285 area. I know, Clutch, don't you want to say something about that 1200?
Oh yeah, absolutely, I do. We do have a CME gap in that area, folks, and that is 1262.70. So
Right. So coming back into this area, that might be, 1285, 1260. I mean, that's not too far from the range. So
and Friday's close this last week has a CME gap that has not been closed yet either, and that's at 1559. So I'm definitely not going to be surprised if we range up there to the 1559 later this week, and that may even happen today or tomorrow.
well, we've got psychological high, which was the open on Sunday at 1511. We've got yesterday's high at 1560. We've also got the 200. So there's a few confluences for us moving in that direction. So if we do start breaking out of this area, I mean, we've got the one peak at 1495, and then we've got this area, which is the psych low at 1510. If we break out of that 15 area, you can see that we have some low volume nodes here as well, that this should be a fast move up into the 200, and then we'll decide what happens, at that point. So should be interesting. We've also got momentum waves kind of on the downside as well, which would indicate that, either going to, move back down to create a second hump and then come back up. That doesn't mean that price is going to come down. We've got RSI. It just may hold and get stabilized in this area before it moves back up. So just be wary of that. On lower time frames, as you can see, we've gotten back up into this area. We're at the 200 on the 14 minute. And so market hasn't opened yet. Futures we're down this morning. Just kind of add to that. We have been bouncing off the daily open, and then we broke out of that with some pretty good strength. So let's see what we get to when we get up to this 15 area. If it gets up to this area and it really starts to get choppy, then I would look to fade that move. But just from an overall standpoint, I mean, even looking at back to the hourly, I mean, if we come back up, we may come back up, diddle dally around in this area, but we still have a second leg of this formation that we need to hit, and so we will be coming down at some point. What's up, Clutch?
No, I like your word,
Dilly
diddle
dally,
dallying,
yeah,
diddle dallying.
diddle dallying around.
Well, what
So
was the
so
one
one
from
of the
last night? Fantastic,
what fantabulous.
fantabulous. That's it.
Yeah, it's a little
Also
fantastic and
fantabulous.
fabulous, fantabulous.
This
Yeah,
show's fantabulous,
yeah.
ladies and gentlemen. That's tomorrow's title, by the way. The
That's
show's fantabulous.
fantabulous. So we got $5.0 billion in perpetual futures that are out there, as you can see. We kind of had this run up in price here. We had OI kind of reacting as we came down. Price came down, so did OI. So we have a lot of longs that got on board with that. We still got a lot of shorts that are out there. So this last move to the upside, as you can see, created a negative effect in the OI from on this particular chart. But do we have positive overall? And some longs are probably coming on board. This is a little interesting chart that I kind of came up with, and this is looking at OI on a smaller time frame, right? But this is looking at OI on a smaller time frame where you can look at where OI changes. So as you can see, this is on Binance. We had this move to the upside, which basically busted out a bunch of these shorts. Now you've got OI starting to build, so you've got some longs who are coming on board. What these lines below here are basically spot and CVD for stable coins and CVD for coin margin. And so let me just reset the chart a little bit. You can see when spot starts to front run CVD on some of the perpetuals, you can see a price kind of increase, but you always expect those things to come back. And so we've had this move to the upside. You had OI that increased off of this drop, and so you knew that they were going to come back and kind of tackle this portion out of it, and so they've done that. So this chart kind of gives you an idea of CVD spot.
So what is this chart telling you right now?
To OI. What this chart's telling me is that we've got some longs that are coming on board because CVD is increasing to a positive. It's pretty stable right now. We don't have spot that's outrunning anything, at this point. So before this spot was kind of lagging, it was letting these folks come about because we had, some of this addition here, these coming in as shorts. And so as spot increased overall relative to price, then you had a bunch of liquidations down. Now you've got longs are starting to increase as well as we move up, and we'll have to see how spot and CVD react to this move to see kind of where you're at. When you start, what I look for are some of the divergences between spot and CVD, and when spot front runs versus when spot's below, that can also be indicative of a move that's about to happen relative to what's happening on the OI side.
Cool.
You know what I'm saying?
I do.
I know you do. So here we go. So this market hasn't opened yet. We've got the futures market that's out there. We've got negative 232 on the Dow Jones. S&P's negative 32, and NASDAQ. So we've got a lot of Monday morning sell-off relative to futures. So, we might see a little bit of a bounce at the open. What is kind of amazing is that we've got futures that are down on the stock market, but we've got ETH here pumping. So we'll have to figure out who's right, eventually. But I know that sometimes, especially when we get into these big sell-offs on a Monday morning, sometimes those pop up, at the open as people kind of react to that. So we'll have to see what that looks like. As far as news this week, well, I guess there's none scheduled today. Somewhere there's a holiday because I was listening to another podcast.
It's next Monday.
Yeah, but today we have a liquidity pool that's down as well. It might be in Europe or it might be somewhere else. I don't know. But I know we have a liquidity pool. It's very odd that we don't have anything scheduled on this Monday. But we've got consumer confidence index tomorrow. We'll be taking a look at that. You got John Williams speaking as well tomorrow, 11 a.m. Home price index. I think everybody's aware that homes are starting to slow down. ADP employment report. This would be big, because I do think that that's going to be a factor relative to the pivot and you got initial job claims, continuous job claims, SAR, construction spending. We've got Bostic speaking, and then we've got non-farm payroll. So this is unemployment rate. So this week is all about employment, right? So this will speak more than anything to what the Fed's next steps are going to do, because I think they're trying to get employment under control. And if we look at the next Fed meeting, which is not on the chart, but it's on the 20th and 21st, which is in a few weeks. I think it's like a Tuesday, Wednesday, and then they'll decide on what the next steps are, relative to the Fed, and we should have a better idea of kind of what is going to happen in the next, few months. But this week's going to be very critical as it relates to unemployment. That's all I got on my end. What's up on your end, Clutchy?
Well, let me share my screen and we will get into that. So, let me know when you can see my screen, please.
I can see your screen.
All right, we got a high block capital, and as you can see here, guys, we have about negative $1.85 billion on the cumulative liquidation delta here. And as you can see, we have a lot of short liquidations above us. So I'm not going to be surprised if we move up and then go get these guys. But these guys are also in the range, around... oh, hold on. This is the wrong chart. This is the wrong chart. I'm sorry, guys. Let me get this updated for you. Oh, no, it's not going to work. Technical errors. All right, so we're just going to go.
Well, I'm sure it's pretty similar. I think I looked at it earlier. I think it's a pretty similar.
So we are going to go ahead and jump to Bookmap. So I do apologize for that. But as you can see, let me know when you can see Bookmap.
I can see Bookmap, but it's a little faded.
Good or no good?
Not good. I can see Bookmap, but only can see the limit ask and limit bid and limit differential in the CVD. The rest of the screen is black. There we go. Here it comes. Now we're cooking.
Okay, all right, cool.
Now we're cooking with biscuits and gravy.
Yeah, so we have the VWAP down there at 1450. We're sitting up here at 1489. As you can see, a lot of orders have just popped up around this 1500 area, so we're going to retest that. If we break above that, I would definitely think that we're going to see that CME gap closure, which is at 1556. Excuse me. So we'll have a continuation there if that happens, and then as you can see right here at 1530, we do have some orders with very low volume. So I wouldn't be surprised at all if we get up into that 1530 range and kind of hang out and just kind of fill the gap. So do pay attention for that. There are a lot of orders to the downside here at 1480. So if we do get rejected at 1500, let's zoom out a little bit to get a big picture on where long-term liquidity is. And as you can see, we don't really have too much above kind of where we're at now. And you zoom in, it shows up a little bit better at 1550, but that's about as high as it goes. As far as long-term liquidity goes, we got stuff at 1300. We have a ton of orders down here at 1200 as well. So if we do get rejected, do be paying close attention to see if we bounce off the VWAP, which is at 1450. And if we break below 1450, definitely expect lower prices there. But I'm bullish up to about 1550 today, so I'm in a long. That's not financial advice, but I'm going to ride that CME for sure. So that's all I got for today. You got anything else you'd like to add in there?
No, I think I've discussed enough today.
All right, guys. We'll see you guys tomorrow morning between 8:15 Central Standard Time. Until then.